Welcome back, my friends, to another property update video, and today we're going to jump straight into some articles that I think are worth you guys knowing about. So I hope you're all well, and thank you so much for the 17,000 subscribers. I truly appreciate it. So the first report we have is that mortgage lending dips as the UK property market cools, and we're just going to run over a couple of figures. And I know what a lot of you may be saying, that this is the time of the year, obviously kids are on holidays, less people are potentially moving properties, that we may get a dip and it's just a yearly thing. But again, it's still worth looking at the figures, because for all we know, this could be the start of a potential cool down. So what do we have? We have net borrowing has decreased slightly to 5.1 billion in July, as opposed to the 5.3 billion we saw in June. Whereas gross repayments have increased to 20.8 billion from the 19.4 billion. Now we know that's obviously an increase due to the interest rates, which are going up month by month. And then another thing that we saw here, which I thought was interesting, was borrowers who secured a killer 2-year deal. And I love that word killer, because let's be honest, we'd all love those rates right now, are now at risk. Well, not at risk. They're actually going to see a hefty increase in their fixed rates, as their 2-year fixes are going to be expiring very soon. And if we look now, in some cases, it could almost be double that, as they're averaging 4%. So this is something I think I mentioned on the last update video. And I was trying to explain that, especially next year as well, we've got people on variable rates, people's mortgages are up for refinance. They're going to be hit with more expensive mortgage bills. And then to add to the cost of living, it's not going to be great in my personal opinion, my friends. Now, approvals for house purchases as an indicator of future borrowing increased slightly in July by 500, which is 63,800. And despite the increase, approvals, however, they did remain below the 12-month pre-pandemic average up to February 2020, which was 66,800. So again, take what you want from that particular statistic. Now, interestingly, credit card borrowing grew by 13% in the 12 months to July, which was the fastest rise since October 2005. Now, credit cards, I've got my own stance on that. I see it as bad debt, unless of course you're using it just to increase your credit score and you have the money to pay that back on a monthly basis. But what this can do is, seeing people who are struggling, I haven't highlighted this, which is unusual, as I seem to highlight everything on these articles, but it's going to see vulnerable customers living on bare bone budgets who may not be able to make further cuts to their expenditure potentially take on this level of consumer debt. So it is really worrying times in terms of seeing people have to opt for these kind of stuff, because let's be honest, it's just so difficult for many people out there. Moving on, UK house prices. Will the UK house price crash due to the cost of living and inflation? Again, a question on many of our lips, or at least mine. Now, just a couple of things I want to pull from here. Some interesting statistics here, which I think are useful. What is the average house price? Now, nationwide, but the average is 271,209 in July 2022. Now, this is up 11% compared to previous July, but only 0.1% up since June. So not as big increases, but let's be honest, it was never going to continue to increase the way that it was going. Then we have Halifax, but the average is 293. Interesting why there's a slight difference, but again, it could just be what the actual mortgage lenders have used themselves. And again, very similar statistics here, 11.8 to 0.1%. Zoopla's got theirs, and Rightmove has also got theirs as well. So guys, you can obviously see that on the screen. Now, this was an interesting quote by Henry Pryor, again, a property expert. And I do wonder, what makes a property expert? Am I a property expert? I mean, I certainly see myself as more of a student. I'm definitely not an expert in this game. I learn stuff every day, but what makes a property expert? If you guys know, let me know in the comments down below. Anyway, moving on. Every index says house prices are rising despite common sense suggesting they must soften, but indices don't lie. Now, of course, we can all say there should be a correction, they should crash, but again, the indices aren't lying. They also don't tell the future, however. They tell us what buyers and sellers were doing up to 6 months ago, and like the weather, it feels that things are a little cooler than they once were. So is he indicating some level of cool down, slow down, or crash? I think so. Which one of those three? We don't know. Now, our property price is still going to go up. Now, the question now is this a seasonal slump, or is this the first step towards a slowdown? That's literally what I just said a few moments ago. Now, right now, we know limited supply and demand is keeping house prices high. We're still missing, however, 25% of stock that we would usually expect. Remember, I said we need so many thousands and thousands of new stock, new houses brought to the market just to meet the demand. So competition from other buyers remain aggressive. as he continues to explain here, for the best times, then it's still nearly impossible to buy something if you haven't sold your existing property. It still feels like crazy times, although as that analogy mentioned a little bit earlier, it feels a little bit cooler at the same time as well. So a couple of points that I think are really interesting, guys. Is now a good time to buy? Now, I think I've released a short video on this, or I'm about to release a short video, but I did run over a couple of these things here. Now, rather than highlight a couple of words, I decided to highlight it all just to remind myself to go through this with you all. So firstly, my friends, lenders have increased their increase. Let's try that again. Lenders have continued to increase their mortgage rates due to the Bank of England raising the base rate. And essentially, we've got new 2-year fixes around 4.09%. Alongside this, the price of new mortgages is rising faster than UK interest rates, and the number of mortgage products is falling as lenders assess speculation about significant house price falls. Now, guys, I'm going to touch on this in a few moments, so make sure you stick around for that. And also, if any of this is helping, my friends, it certainly helps the channel out if you could smash up that like button. Honestly, I know I say it all the time, but it sincerely helps. Lenders are also focusing on less riskier home buyers because of the difficult economic outlook. So it's really interesting times. Now, what's going to happen towards the end of 22, nobody truly knows. I've got a couple of videos on the channel, my friends, that are definitely worth looking at because there's questions there that you need to know yourself before answering. Now, this isn't a cheeky plug, but it is to warn you guys. Friends, if you ever add me on Instagram, by the way, thank you for the 30,000 followers, I would never DM you first, ever. So if you see anyone saying, hey, how's it going? How's your investment journey going? Please ignore them. There's a lot of scammers out there. They're trying to sell you some crypto BS. This is my only profile, so I can't say any more than that. I've even got here scam alerts, but for some reason, people just want to get scammed and completely ignore that. Moving on, my friends. So we have UK house price surge to end as the cost of living crisis bites. So very quickly, I just want to run over a couple of things mentioned in this article. Spiraling inflation is leading to a cost living crunch, which in turn has led to the new era of rising interest rates. This is by a Hamptons estate agent, Anisha Beveridge. Now, as a result, we expect house price growth to steadily slow down the remainder of the year and into 2023, when the real impact on households is likely to be felt as interest rates peak. And I think, and I keep saying it, and I said it on the last few videos, Q4 is going to be a shitstorm, and then I think people are going to struggle, panic, and then 2023, if things don't improve, it's going to be a real struggle. Now, according to this poll of 21 property market experts, again, I'm still eager to know what makes a property expert. Home prices will rise 7% this year, but that pace will slow to 1% next year before picking up 3% in 2024. So again, completely going against the kind of idea of a cool down or a slowdown. If anything, it's just more of a little blip in the road, just putting the brakes on ever so slightly before boom, we're off again. So that would be interesting, my friends, to see if this actually happens. And then moving on, my friends, this was one that I've done a video on. Banks pull landlord mortgages after mad rush to lock in cheaper rates. So many buy-to-let landlords who have refinances coming up, they're obviously trying to fix their rates because we don't want to be hit with crazy fees moving down the road, because then essentially what a normal landlord would do is pass these on to the tenant. But let's be honest, if tenants are struggling, as many landlords are too, because they're not all that rich, contrary to popular belief, are they going to be able to afford it? And if they can't afford it, then the landlord struggles, then you're in a whole array of problems. So let's quickly touch on this, my friends. There's been 7 lenders who have temporarily pulled all of their mortgages for landlords or heavily restricted new offers. Now, these include Habito, Al Ryan Bank, Dudley Building Society, and State Bank of India. Also, we have Harpenden Building Society, I think that is, Bath Building Society, who have withdrawn the majority of their landlord mortgages, while Cambridge Building Society has stopped selling buy-to-let deals through brokers. Interesting times. And Mr. Stewart here, who, let's have a look who he is. Angus Stewart, the mortgage broker property master, what a title. He stated that it seems as if every day a lender is getting their product range or pausing lending altogether. Now, the average rate for a 2-year fixed buy-to-let mortgage was 2.9% before interest rates began rising in December 2021. Now, according to the analyst Money Facts, by the beginning of August, this has now climbed to 4.04%. That is a hefty increase, and especially if you've got multiple properties as well. Now, we also know that the government plans to abolish Section 21 or the no-fault evictions as well, which again is going to have a lot more stress on landlords than people are envisaging. This isn't a great thing for landlords. And I think what many people are going to struggle with is understanding that if the private sector and small landlords are pushed out of the market, it's just going to cause more of an issue with the overall housing. So friends, I'm going to leave the video there. Let me know your thoughts down below. Let me know what a property expert is, and also let me know your thoughts on the property market moving forward. Thanks for watching.